Hey, this is Peter Rezenchek from Weekly Options Advisory at ShadowTrader.net, and this is a short video about MDB, MongoDB. This chart pattern was actually given to me by one of my subscribers today from Weekly Options Advisory, and then I started looking at it, and I thought, you know, this is probably a good topic to discuss in this shadow short because this chart looks really, really cool. It's got a lot going for it. So let's just break down some of these technicals here as to why I like this. Firstly, I like gap fills. Understand that the market doesn't like gaps. It's unnatural for the market. It thinks of it as like a void of price action. And most gaps eventually fill. And you can see that this stock is on the way to filling this gap fully, which I think is very, very interesting. The full gap fill would be up here to 308.38. And you want to be thinking about that in terms of like a first target on the stock. But what also makes it very interesting is the fact that you've got a lot of tests here when the stock failed at the big round number. As a matter of fact, the high of this move is exactly 300. And whenever I see something like that, I always think of it as a relatively weak reference. And a weak reference is one that can get toppled over very easy. So it seems to me that the only reason people were selling right at that level is because it was that big psychological number. So obviously there was a lot of large size sell orders of people who wanted to get, you know, close to break even or whatever right at that 300, and you can see it just push the stock back. And what is very interesting is the price action after that is that because of those sell orders, you can see the stock just sort of fell off. But then when it started to come back, it also did something very interesting in that in an increase in volume here, it took back almost all of this. I mean, pretty much like 95% of it in just 2 days. And I call that the sellers shut off pattern. And what the sellers shut off pattern tells us is basically that, you know, stock should move higher, and also that you have kind of like a safety net of selling puts below these big bars. And that's something that I like to use in options a lot. I call that risk reversal, where I sell put premium to bring in money and I spend it on calls. So let's just say that we wanted to do that and get creative here instead of just buying the stock, which you certainly can do. I mean, the breakout level at 300, for those of you who just play straight equity, could be a buy there. You'd want to have a first target here at 308.38. That's not bad. You got about an $8 move. And then also keep in mind that this move here is pretty much straight down. So I think there's potential that the stock could actually come closer into this area, which would put it closer to about 360. So keep all of that in mind. But let's just look at the options chain for a second and see what's here. I've selected just a couple of things to look at. So if you wanted to look at this very short term, and it may be too late for that, but notice that here on tomorrow's expiry, this is just a straight butterfly, just to capture that move. It's more than likely that it will see the 300 level. So there's good risk reward here. And if you can pick this up early in the session, it's not bad. It's probably a pretty good bet. If you look here on the October 11th, which is tomorrow, you can see what the premium is at the 300. It's still decent. I mean, it's 82 by $1.16. So you'd obviously be selling some decent premium there. And you could pick that up on a DTE1. Like, actually, it would be a DTE0 basically, right? You'd just be playing kind of like a day trade. Pick up that butterfly as early as possible and see where the stock is at the end of the day. The other thing, as I was saying, would be like a risk reversal a little bit longer term. And the key to that really is to always be setting up a long in terms of the debit that you're spending on slightly longer term here than the credit that you're collecting. So you can see here I put October 25th as a long and October 18th. And it doesn't necessarily mean that I'm going to use these strikes or that you have to use these strikes, but in this short video, I'm just giving you an idea of something I would be looking at. I would be thinking relatively conservative in terms of how far it could go. And I would give it a couple of weeks and say 300 to 320, give it till about Oct 25 so it's got time to get there, but not really thinking of laying out big debit and assuming it's going all the way up to that 360. So I could be relatively comfortable with $5, which is a 4-to-1 risk reward, which is not bad. 4 by 1 is definitely pretty healthy. I like to look for opportunities that are at least 3. 4 is obviously even healthier than 3. And then if you notice here, I did put up the 270 put here, and you can see it's 80 cents marking here, which isn't bad. So obviously you'd have to sell more of these than you buy these to make that even. But don't forget, it doesn't also have to be even, right? You can just kind of use that 80 cents to chip away at that. Now, the way you also want to be doing this, and this is really helpful, is that you can lay out the call debit immediately. Like let's say the stock goes to 300 tomorrow and you say, okay, it's going to go. So it's like, boom, you're in the 300, 320 call vertical here, and maybe you're paying about $6 at that time. The way I like to look at things is that if the stock continues to move higher, you don't need to buy the puts to offset the cost. And you don't really, or sell the puts, excuse me. You don't need to sell the puts to offset the cost. And you don't really want to be a put seller when the stock is high. You want to be a put seller only when the stock is low. So one of the ways you can look at this strategically is to buy the call vertical, right? That's, so let's say it's the 300, 320. And then if there is some sort of pullback, you want to be monitoring to see where it goes in relation to these bars, which I believe is going to be very shallow. It's relatively rare that when you have this pattern of the large bars that sort of engulf many, many small bars, it generally doesn't retrace too far deep into them. So I'd be looking for any kind of a pullback, like, 295, 290 or whatever, and that's when I would strike and sell 270 puts or 260 puts and something like that, and thereby whittle away some of my cost on that call side. Hey, this is Peter from ShadowTrader.net, and I just wanted to thank you for watching this video. If you enjoyed this content, please hit the like and subscribe buttons, and if you'd like to trade live with me every day in my weekly options advisory, then check out the link in the description below. I wish you good trading, and I'll see you in the room.